Episode of Canadian Mortgage Weekly. We're talking about how much you can afford for an average price home in Canada. And there's some really interesting information I'm going to get into today, as well as going through some of the normal mortgage and real estate updates that I go off of every morning when I do my episode of Canadian Mortgage Weekly on Thursdays at 11:30. This is Canada's only weekly mortgage news podcast aimed at the Canadian homeowner and mortgage holder. And in Canada right now, we're seeing super high interest rates. And from what I'm seeing with clients that are looking to get into the market and have a down payment and have strong employment, what I'm really seeing is that these clients can't even buy a 1,500 square foot home. They can't even get into the market at all. And that's so concerning because just a few years ago, I saw clients being able to get into a average price home in Canada, have one income or two incomes, and there was no trouble doing that sort of thing. As a matter of fact, there was folks that were able to do that, and they were saying, you know what, Joe, we don't think it's the right time to get into the market. We're going to buy a car. We're going to buy, we're going to go on vacation first, and we'll save up the down payment and buy later. Maybe the prices will come down later. And that was when the average price home was around $400,000. And that was already seeming high at that time. I remember that was, I think, 2016, 2017. And I've been in the industry now for 13 years, in case you guys are all wondering, as a mortgage professional. This is my 13th year working in mortgages, and I've seen house prices go up considerably since that time. And I remember throughout the whole time, people were always saying to me, we're going to wait to get into the market. We're going to get into the market when prices drop and when prices come back to normal. Well, 13 years ago, the average price home, I remember in Toronto, was around 500,000. And the average price home in Canada was lower than that. Now the average price home in Canada is over 700,000 in Canada. And in Toronto, we're looking at over $1 million. And with interest rates having gone up so significantly since the beginning of my mortgage career 13 years ago, it's just that much harder to get into a home because of the cost of the home and because of the cost of the interest rates. So I am going to share with you some stories today of some of my clients that I've been dealing with that have been trying to get into the market this year, and of some clients that have actually been trying to get into the market for a number of years now and just running into roadblocks, more roadblocks, more roadblocks. So the first type of profile of client I wanted to cover off of is the single person that is either recently divorced or separated, trying to buy their own home. These folks usually have a full-time job making approximately $75,000 a year. I'm going to be using that number. It might not be realistic for you, but that's the number I'm going to use. $75,000 of an income. And if you have a $75,000 income from your full-time position, you will probably, because you're separated, you may have either a spousal or child support payment being paid out to your ex-spouse, or you may have a situation where you're receiving child support or spousal support, depending on how things worked out during your separation and divorce proceedings. So one of the things that I see let's look at, first of all, the person that's receiving child and spousal support, and say they're receiving $1,000 a month total in child and spousal support. So that will bring their $75,000 income to a total of $90,000. And if you're just joining me now today, my name is Joe Bladdick. This is Canadian Mortgage Weekly. Just to give you an idea of what we're chatting about, how much I can afford in this market. And we're going to cover off a few different profiles that I see regularly. And I'm starting off with a single person that is recently separated. And this profile, for example, will be the recently separated divorced person making $75,000 a year from their full-time job and an additional $1,000 a month in child and spousal support payments coming to them. So that would actually bring their income up to 87,000. I said 90,000. I don't know where I was getting that math from. So 87,000. Now in Canada, to buy your first home or second home or third home, the minimum down payment you would need is 5%. So if you're looking at putting 5% down, that can be a significant amount of money for some people, especially if you're a single person with a single income. And in Canada right now, the way it works is on an average priced home, you can't even just put 5% down. You need to put 5% down for the first 500,000 and then 10% down for the remaining purchase price. So let me go through that with you with the average price home in Canada. Because with knowing exactly what the average price home is, we're going to be able to work this out together. Okay, so the average price home in Canada right now is $729,044. So you would need to put down $25,000 for the first $500,000, and for the remaining $229,044, you would need to put down an additional $22,904.40. And if you add that to the $25,000, your minimum down payment then becomes $47,904.40. That down payment is more than half this person's total income. And when I say total income, that's including their full-time position and spousal and child support payments they are receiving. Now, can they afford the mortgage for this average price home? And that's what I'm seeing a lot of people come in to me right now. They're coming to me saying, you know what, Joe, we want to buy just a regular home. We don't want anything special, just average. And unless you're in Winnipeg, which is the lowest price city in Canada, you're not going to find anything much different than $729,044. Well, this person can't even afford the mortgage for this home. You won't be able to get qualified for that mortgage. The mortgage amount, just to give you an idea of how much that would come out to, that would amount to $681,139.60. So you're probably wondering, well, why wouldn't the bank give me this mortgage? Well, if you're looking at what the payments would be right now based on today's rates, and the rates right now are around 5.5%. And if you're putting that minimum down payment of $47,909.40 on that home, you're looking at a monthly mortgage payment of $4,193.37. That's quite a substantial mortgage payment when we compare that to rental costs. A lot of folks can get a rental still with utilities included for under this amount. So that begs the question, how much can this person then afford if they are earning $75,000 from a full-time job, recently separated or divorced, and also earning $1,000 a month from child and spousal support, for a total of $87,000 in total income each year? Well, they won't be able to afford that average price home, let alone the mortgage with that down payment that is more than half their annual income. Roughly speaking, based on the stress test and today's rates, they'll be able to afford a mortgage of, get ready for this, $351,000. So how much short is that compared to the average price home and that mortgage? Well, we are short approximately 333,000 in comparison 335,000 in comparison to the average price home and that mortgage. So it becomes such a disconnect and such a unattainable thing for the single person to buy a home. And this is happening quite often. I've been dealing with a lot of folks that have recently separated or divorced, and I'm seeing a lot of these situations where, they have a spousal buyout in the bank account. They may have $50,000 ready to go to buy that house. They're all excited to start their new life. And they come to me saying, "Okay, Joe, I'm making $75,000 at my job. I'm making $1,000 a month from my ex in spousal support, child support payments. I'm making $87,000 a year total. You know what? I'm also getting Canada Child Benefit of $500 a month or whatever it is. That can also help, but not that much." And they're like, "Yeah, we want to just buy this average price home in Canada, and the average price home in Canada, $729,044 right now, in case you haven't joined in yet. And in case you're joining in just now, we're talking about how much can I afford in this market. Specifically, we're going to cover off different profiles, starting off right now with a single person with a full-time income of $75,000, earning $1,000 a month as well in child and spousal support payments. So, and this is all in Canadian Mortgage Weekly, Canada's only weekly video mortgage and news podcast for the Canadian homeowner and mortgage holder. So they'll only be able to afford a mortgage of $351,000, and with their down payment of say $50,000, they're only going to be able to afford a home, if we take that same down payment, of under $400,000. And where can you buy a home for under $400,000? My local market right now is Barrie in Orillia, Ontario, in case you guys don't know where I'm based out of. If you're based out of Barrie or Orillia or Simcoe County or even Ontario in general, hello. And if you need mortgage advice, feel free to always give me a shout after the program. Be happy to help you with that. But where can you find a house for $400,000 or less? Again, I think Winnipeg is one of the only markets right now that have houses in that price range. Otherwise, if you're looking in Ontario, the only way these folks are getting into a house right now is with co-signers. So let me tell you a little bit about some of the co-signers I've seen for folks that are getting out of a relationship and buying a house for the first time. Well, a lot of the times, mom and dad, both working, will co-sign. Sometimes I see even the ex co-sign, which is interesting because you have to be on good terms with them. But a lot of the times the ex does co-sign, and I've done mortgages like that where I'm dealing with both parties. And another thing would be that they can get friends to buy the house with them. So say it's a single person, which I've dealt with before, where they buy a house with another couple and then they split up the house accordingly. The single person lives in they'll put in a granny suite or a second suite, or buy a house already with a second suite. They'll live there. And then the family that is buying the house with the single person together will then live in the other part of the home. And with all that, how does that work then with co-signing? A lot of people don't have co-signers, but they still want to buy the average price home. So let me bring up for you all what income you need to buy the average 1,500 square foot home. And it's a really interesting article, actually, I've seen this morning that was very timely for my program today that I want to share with you all. And I'll just share it here on my screen. Let me just bring this up here. If you're following me right now on Facebook and YouTube, I will share my screen. If you're following me on TikTok, I will show you my device in a second here and show you what I'm talking about. Okay, let me just set this up right here so we can look at it together. Okay, so if you're looking on YouTube or Facebook, I have it on the screen here, but here's the article on my device, just to give you an idea. It's from Village Life this morning. And as you can see here, it shows that the average 1,500 square foot home, the annual gross income required to purchase a 1,500 square foot home in Ontario is $175,491. So who has this amount of income these days? Especially if you're living in a smaller town in Ontario. Well, what I'm seeing that's contributing to things like this is remote work. Folks that are in Toronto working for the big corporations, they have two good salaries of $100,000 each, and they're able to move anywhere they want. And they're moving to smaller towns and buying the normal houses there and living on a budget, like living on the cheap, because for them, a $729,000 home or a 1,500 square foot home is very reasonably priced compared to where they work out of, and that's Toronto. But if you want to buy the average 1,500 square foot home in Ontario, you're looking at an income of $175,491 that is required. And that's completely different than what it was 4 or 5 years ago. As I mentioned at the beginning of this program, I've done many mortgages earlier in my 13-year career where people were making 40, 50, 60,000, and they were able to buy a house all on their own without a co-signer because interest rates were lower, there wasn't a stress test, house prices were lower, and down payments were lower. And all that combined, we could get into the housing market a lot easier. And now, with an average annual income required of $175,000 to buy just a regular 1,500 square foot home, who's going to be able to afford that? Who's going to be able to afford that? And remember, on top of that, the minimum down payment for an average price home in Canada is $47,909.40. So not only do we need to have that income level achieved, but we also need to hit that down payment minimum. And that doesn't include things like lawyer fees, which could be around $2,500. And it doesn't include things like land transfer taxes, which on that priced home would be just over $10,000. So total required would be close to $60,000. Now, if you're a first-time home buyer, there is a $4,000 rebate on land transfer taxes, which puts a dent in it, but still it brings your amount required just north of $55,000. So where do we go from here? If folks can't get in the market on their own, what am I seeing? Well, a lot of the times people will go back, talk to their family, and either they can't co-sign or they have bad credit or they can. I'm seeing a lot of the times right now, I'm putting minimum 3 people on a mortgage application, 3 people going on title, minimum, just to get in the market. So if we're seeing a minimum of 3 people going on title, that can either be a single person moving in with 2 co-signers, either aunt and uncle, or 2 parents, or a friend and a family member, or a family and another single person moving in together. And quite often, I'm even seeing four people on title and four plus people on title. I actually had an application where it was immigrants that came to Canada. They came to Canada within the recent year. They had cash in the bank. They wanted to buy a home immediately. They hate renting, paying $3,000 a month for rent. And what they did is they all had minimum wage paying jobs. So they're all making $35,000 a year, but they all go on title together. So if we're looking at 35,000 with five people on title, 35,000 with five people on title, that is that $175,000 income for a 1,500 square foot home. And then this family, then the husband, the wife, the son and daughter that's working, and maybe a grandparent that's receiving a pension or working part time at the electronics store down the street, they all go on title together. And then we have this mortgage with five names on it. And that is very common these days. Very common. And these multi generational family homes that I'm seeing right now in Canada come to play from these immigrants that are coming to Canada wanting to buy a home immediately. It's so common that they're not even phased by this higher pricing and by this higher income qualifying because they don't care. They all want the home together. They're all going on title together. And it's really challenging the status quo that Canadians have been used to all these years where I'm an independent person. I can hold my own. I should be able to buy a house on my own. But just it's so hard to qualify now to the point where it's impossible for the single person to buy a house on their own. It's so unfortunate because some of the most vulnerable and people that need a home are these single folks that are recently separated or divorced, trying to get into the market again after a big life change, and they just can't because prices have gone up so much. And a lot of it's to do with the fact that new to Canada folks that are immigrating from all over the world, they're bringing the whole family over. They're all getting minimum wage jobs and they can afford the home because they don't mind going all on title, where the independent single person in Canada is being threatened with their stability. And a lot of these times, this independent single person, they're working full time, they're earning child support and spousal support from their ex. They're also taking care of their kids, and they are the ones that need the home, probably the stability for their children the most, versus the family that is established and all working. I mean, that can be argued, but children need stability. So, again, if you're just joining me right now, I'm talking about how much home you can afford in this market. We went over the profile of the single person earning $87,000 a year. That is a combination of a salary and child support. And we saw that they can afford a home of just under $400,000 on their own. And an average price home is $729,044. And as I mentioned here, the amount required to buy a home, a 1,500 square foot home in Canada, is $175,491 in annual income. And just to summarize, that's happening quite often when four or five people go on title together, but really threatening the single person's ability to buy a home. So what can we do? What can we do if there is a situation where someone wants to get into the market and they don't have the ability to do that? Well, I'm still working that answer out. It's really unknown to me whether or not the housing market will crash. Rates keep going up, and in the last 4 months, house prices have been going up. Let me get into that right now with you all. Because if house prices have been going up, then that just puts more pressure on folks. They need to get more co-signers, more income coming in. But the last month, the average house price in Canada went up 2%. It's been going up since February, since houses dropped. If you're one of the folks right now that are waiting for house prices to drop, I'm going to be honest with you, they did drop last year between February of 2022 and February of 2023. There was a significant drop over those 12 months. And then since February of 2023, we've seen a steady increase in month over month house prices in Canada. And that had to do with a lot of the fact that there's just that much population in Canada. We just hit 40 million people. There's that much population in Canada that's really pressing the demand in Canada. The next numbers, which will be for June 2023 for average national house price, will come out most likely in about 10 to 11 days. So we'll probably have that in the episode 2 weeks from now. So what's happening right now with fixed rates in Canada? Fixed rates in Canada have been going up so much. In May, we saw fixed rates in Canada hover around the 4.5% mark. And now fixed rates in Canada since May have gone up to approximately 5.75%. It's such a huge increase. And that had to do with a lot of the fact that inflation went up again in April and May. And we saw only 0.1 inflation increase, but then we did see inflation fall again. But because inflation did go up in April, the Bank of Canada did meet on June 7th and decided to raise interest rates. So it's really put a wrench in things with interest rates and made it that much more unaffordable. Now in May, the inflation rate did go down to 3.4%. And yes, I do see a lot of folks moving to Alberta. That is one of the hottest provinces where people are moving to, because Calgary and Edmonton, plentiful in jobs in the natural resources sector, as well as way better pricing on homes versus Ontario. Also, you don't have to pay PST. Huge benefits in Alberta. Not everyone does have that ability. A lot of people do have family, children in school. They don't want to mess that up. So if you have that, then that's definitely something that I would consider, or I invite you to consider, because in Calgary and Edmonton and in Alberta, you can get a higher paying job with a lower priced home. It's one of those markets that is a little bit easier to afford in. Keep in mind, it did say Winnipeg, Manitoba. If you're okay with those winters, Winnipeg, Manitoba still has the lowest priced averaged homes in Canada. I think we're looking at around 400,000 last time I checked for a average price home in Winnipeg. So if you're a single person wanting to get your own detached home, that's where you need to go to. If you're looking to buy in Ontario, I can say if you're a single person and you want that independence and you just want to be on the mortgage yourself, it's not really going to happen in Ontario. So inflation numbers are at 3.4%. We'll see where they go next month. The new data here for next month will be out on July 18th. So that is 12 days from now. All right, what's happening with the jobs report in Canada? I know that unemployment did go up a little bit from the prior month. All right, looks like the unemployment rate is at 5.2% currently, and that's for May. We don't have June numbers yet, but a 0.2% increase in unemployment in May. And I believe the unemployment did also go up in April as well by 0.1%. So unemployment is going up in Canada slightly. We haven't had unemployment go up in Canada for a little bit of time. It'll be interesting to see if this is a long-term trend or if it's just short-term. But if we do see unemployment rising steadily, the Bank of Canada will be influenced, not forced, but influenced to lower interest rates, which will be interesting to see how that pans out. Because if interest rates do come back down, we would see another frenzy in the housing market as people who aren't able to afford anything right now will start jumping way back in. US inflation has been steadily decreasing. US currently at 4%, down from 4.9% in April, down from 5% in March, down from 6% in Feb. So US is on track. And what else is happening? The Canadian interbank rate. That's the rate that banks use to price their variable rate mortgages. Interbank rate has been rising steadily, currently at 5.39%. And usually we see a we need a variance of 2% between the prime rate and the interbank rate. And right now the interbank rate and prime rate being at 6.94%, 6.95, we're seeing a variance of just under 2%. So variable rate right now, obviously not the most competitive option. It's still right for some folks, but not for most folks right now. And it's really good to speak to a mortgage professional to see if variable rate is right for you. And what I always suggest, and what a lot of people don't do, is ask the mortgage professional what they're doing for their own personal mortgage. Where is their personal mortgage? What term did they pick? Did they take fixed or variable? And why? And you're going to get so much of a different answer because a lot of those folks, you'd be surprised, do something way different than what they recommend for you. I see it all the time. Clients get blindsided by that. So if you want to talk to me about what I do with my personal mortgages, I invite you to schedule a call with me and I can talk about that with you all to give you an idea of what I'm doing personally. Variable rate right now, not really the most competitive option. Inflation is going down. Next Bank of Canada meeting. It's next week on the July the 12th at 10 a.m. I'll be doing a special Bank of Canada episode with my mascot interest rate. If you remember my mascot interest rate, she's my little guinea pig. I have her predict whether or not rates will go up, stay the same, or go down. And she's correctly predicted all the interest rate announcements up to now. So join me on July the 12th. I'll be going through the pre-rate show where I speak for about 15 minutes before the Bank of Canada actually releases live their decision. I'll be going through some of the news, the articles, what my clients have been saying they think is going to happen, as well as what the professionals in my industry think is going to happen with interest rates. And then we'll talk about the live announcement with the Bank of Canada on July the 12th at 10 a.m. So if you've been watching so far, thank you very much for checking me out on TikTok. Facebook, YouTube. We're also on LinkedIn. We're on Twitter as well. And hopefully soon to be on Threads, if I can be on Threads. If you haven't joined Threads, I'm on there as well. And appreciate the follow. If you like my content, I invite you to follow my channel, subscribe to my channel, hit that plus icon. Next week, I'll be going over the live interest rate announcement. And as I mentioned, if you're just joining me today, we were chatting about how much I can afford in this market. And for that single person, whether or not you're recently divorced or on your own and single 100%, pretty much we established that it's impossible to buy a 1,500 average priced home in Canada, 1,500 square foot home in Canada on your own. And I shared with you all that what I'm seeing very often right now is 3, 4, or 5 people buying a home together on title. And the way they are doing it is they are either co-signing together or it's a whole family moving in together as a multi-generational home. And those multi-generational homes are from folks that have immigrated to Canada. It's the whole family. They're all working minimum wage jobs and they're all going on title together. And it's so common, these 5 people on title, that they're pricing these folks that are just the one person on title out of the market. Anyhow, thanks very much for joining me today. We'll see you next week on Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast. And if you're looking to schedule a time with me to chat about mortgages, I invite you to do that with the link with the video description below. We have a link there that goes directly into my calendar. You can schedule a call or a video call with me. I'm a Ontario mortgage broker working across Ontario, 13 years experience, and looking forward to chatting with you about your mortgage, or just send me a text message or a message on social media. Thanks for watching, and we hope you have a good day.